Good afternoon, everyone. Charting Man Dan of the Chart Guys checking in on things as the Bears had a pretty solid end of the day. Is it enough for them to resume their complete control? We'll see in just a moment. Before we get into it, I did an interview today. There's a link in the bottom, talked about markets and trading and all that kind of stuff. And we've also got a video from Lamont on volume profile, going over one of the swing trade picks, how he uses volume profile for establishing targets. So both of those links will be in the comments of this video. So S&P 500, we had a bullish morning and we had a tightening hourly range. So this was the overnight low, the high of pre-market, the low of the day, the high of the day, and then we rolled over and broke support into the close. We had a nice setup for the Bears in the afternoon, and it was a confluence of signals. You've got a longer term resistance level and you've got a short-term bearish pattern. And the bearish pattern was a rising wedge. As the bull breaks started to lack follow-through, it was a bit better on the NASDAQ, which we will look at in just a moment. But essentially, bull breaks lacking follow-through, a double top at resistance, and then a very significant bearish move into the end of the day. And if you look at the NASDAQ, it was similar but a little bit different. So we broke the high of pre-market, but we knew to look at SPY and say if SPY does not break its high of pre-market, NASDAQ bulls aren't going to go very far. And what I cared more about the NASDAQ was the futures inside bar. So we had an inside bar yesterday, and today, now we have another inside bar. And again, it was the 5-minute rising wedge. I was actually watching it on the 2-minute time frame as it was taking shape. And just a really nice, again, confluence of signals. I have much more confidence in a rising wedge if it's looking for a lower high or if there is a resistance level in play. And just finding that, no, I'm not going to find it. The rising wedge post from earlier in the afternoon. So overall, bears are keeping their short-term control. We know the burden is on bulls. The bulls have to prove to us that they're doing something here, and they've been trading sideways, but unable to prove anything. So bears are remaining pretty confident here. And we also have weakness now after hours in some of these names, and also the semiconductors, which we'll look at in just a moment. So natural gas, continuing the bounce plays. So first 5-minute oversold conditions yesterday. Then today we had 15-minute oversold. We got real close a couple times, couple percent bounce there. You can see this is the bulls front running oversold conditions, meaning the RSI gets down to 31, 32 before the bounce takes place. The bulls don't let it get oversold. They're so eager to buy. But we eventually rolled over and we had first 30-minute oversold conditions, 15-minute oversold conditions, and the 5-minute RSI was down in the teens. And that's what we call a super stack when we have a lot of time frames aligning oversold together. And again, just the bounces here just keep showing us aggressive dip buying where the bulls bounced 8.5% as a result of that oversold bounce. I've been doing a good job trading these oversold bounces in terms of entering. I've been doing a bad job leaving runners. It's almost like I'm not trusting this move, and it's something I got to work on. And I think it's a lot easier for me to leave back burner runner positions when we're in a lot of uptrends and in a breakout, whereas this is, yes, a significant bull move off the lows, but coming from such weakness, my mindset is lock in the gains while I have them, but definitely left a lot of money on the table over the last couple of days trading these Boyle bounces. I was all out of this bounce. I think 591 was my entry, and I was all out by 608. And again, just so much left on the table. Got to leave that runner. And let's see now if I've learned my lesson after making that mistake 2 days in a row. And the stair steps. If you don't know what stair step is, Google ChartGuys stair step, but not scaling into the weakness because we know the RSI can get extended in natural gas in both directions. But as soon as that stair step pattern breaks, it happened at 593 here, and that marked the bottom. So utilize those stair steps as an entry signal and also then having a stop to go off of in natural gas. The dollar, still a 12-hour uptrend holding EMA 12 support. This is helping the broader market stay weak. It is a potential rising wedge, so I am going to be keeping an eye on that still, but bulls are holding on just fine. We've got the close of monthly candles. We've got the dollar closing right near its monthly high. We've been watching for this dollar monthly bounce for a couple months at this point. It's trying to shape up here. And we've also got the indices closing at their monthly lows. And it's looking like the potential that we're going to see monthly consolidation begin. And again, just one more time, big picture, talked about this before, but going to be watching for the possibility, I am open to the possibility of an inverse head and shoulders on the monthly time frame. Scouting it on the 2-week time frame helped us with bull gains back in January. And now we're going to be watching for that possibility on the monthly. And again, if we see this monthly inverse head and shoulders take shape, that would mean that the dollar is confirming a monthly downtrend. And that would be a notable win for the broader market bulls if that were to take shape. I'm not attached to that taking shape. I don't think it's the most likely scenario. I'm wide open to that happening, and I'm wide open to fading back towards the recent fear lows. I'm just taking it one day at a time. As I mentioned, I went back to flat in my IRA, but could potentially go right back to a bear lean if we follow through from here. So multiple daily inside bars on the NASDAQ, and of course we're going to watch to see how we break those inside bars tomorrow. NVDA news after hours. So again, this resistance zone that we talked about yesterday is just picture perfect as far as a top, a rejection twice yesterday, and a rejection yet again today. And so again, we were testing that resistance as the NASDAQ is forming a rising wedge, and then we roll over, and now we have dilution news after hours, 10 billion share prospectus or something like that. And so that's leading to, we could see the relative weakness into the close. It very clearly stood out to us because we were dropping here while QQQ bounced. And QQQ is a 5-minute bear flag, but it bounced for 20 minutes, and NVDA did not. It just kept dropping for 20 minutes. And so now the bears are following through after hours. We've got oversold conditions on the short-term time frames, but if NVDA breaks to 29.47, which it is doing, and will likely do tomorrow, we're back in gap fill territory. And so it was just a wall of resistance that the bears did a great job defending. Yesterday it stood out really clearly because the bears defended resistance while the NASDAQ was real strong yesterday morning, and bears getting their win today. So the first target would be the gap fill down at 211.04. But we can also say if we're going to fill that gap, that means that the broader market is going to keep dropping and see significant weakness over the next couple of weeks, which is possible. But momentum has been shifted. NVDA divided by QQQ has been a relative bull, and it's going to shift into a relative bear here as it is doing after hours on that dump. We got a vacuum in the background. Tesla. So we're watching for Tesla to do the same thing. Is Tesla going to shift into from a relative bull to a relative bear? Is this a 2-day head and shoulders? Absolutely possible. With this being a left shoulder and this being a right shoulder, we would have to break make that 191.78 as the first indication that momentum is being lost. Tesla divided by QQQ is a potential rising wedge. We must lose daily EMA 12 support for the relative strength to shift into relative weakness. And again, just going back to the last time this happened, we had relative strength on Tesla. Once we double topped at this resistance zone, the relative strength shifted into significant relative weakness. And this is very similar to the distribution pattern from back here. Seeing this now, it's just taking place on half the time. This took place over a prolonged period of time. Look how similar this is. There's your left shoulder, there's your head, there's your right shoulder. And so we're watching for the possibility that that same thing is taking shape. But look at Tesla divided by QQQ. Last time, all bull, and then once we confirm the daily downtrend, it was game over from there. This time, it's still all bull. Gotta lose the daily EMA 12 for the Tesla bears to start taking over. Healthcare, great job for the bears, just following through. Again, every bear break led to a bounce this whole way down, and that started to change over the last week. The bear break is seeing follow through. We're heading to daily oversold conditions. We've got the double top at the all-time high, and we're heading back down. There's a lot of support between 117 and 122. We can certainly call that a support zone, and there's a potential play off that. If we were to head down towards those levels from here, we would be very oversold, and I would absolutely be looking for a bounce off of there. But we can certainly say that our lead bear out of our major sectors is staying a lead bear. And we compare that to XLF. XLF is holding on much stronger. Today, XLF was a daily inside bar. It was our strongest sector out of our major sectors. And how this inside bar breaks is going to be telling tomorrow. If the inside bar breaks bearish, that's going to be another win for the bears. So watching that closely tomorrow. IWM double top. Again, the resistance zone now just over 190. And it's a potential 4-hour inverse head in. I don't like the view on the 4-hour, but the psychology is there for an inverse head and shoulders. But we're leaning now to the bears about to take over for another leg down. And so I am very cautious as a bull at this point in time. Essentially, I need to see bulls get over on SPY. I need a bull break over the high of yesterday. And on QQQ, I need a bull break, same thing, over the high of yesterday as the first indication of, okay, bulls are showing me something. But if we don't break the high of yesterday, bears remain very confident. Biotech sector is still trying to bounce. Not a whole lot going on. At this point, we've gone from a daily tightening range to a weekly tightening range to now a monthly tightening range. And so I'm just watching for this monthly tightening range to give us a break sometime mid-year perhaps. But until then, I haven't been trading the biotech sector much. And again, I'm just constantly shifting from significant trading opportunity to hands off when we're sideways. Same with AI. Significant day trading opportunity and now hands off while we're tight. MARA. So MARA was tricky today where bulls had full control of the morning. We had news, and the news was very bearish. The news is, hey, all those earnings reports that you've been reading that we've been putting out? Well, the SEC contacted us, and there's some misinformation in there, and we're going to have to revise them. And we're not putting out our earnings today, and we're not having a conference call today. So we get the initial reaction of what you would expect. Big bear flush. Very surprising V-shaped bounce. All these bounces, we're in the chat room. We were on top of this news, but we're sitting there like, what is going on here? This is very unusual price action for this news. We should be following through to the downside. And then, of course, at the end of the day, there's your follow through. But it's almost like it needed the NASDAQ weakness to roll over because QQQ topped out at 205. And that's when everything shifted and it's okay, well, the news is now, it's reacting as it should. So that to me says the power of the correlation to QQQ was more significant than the individual news. Whoever's got these algos and bots hooked up to trading MARA wasn't catching the news. They were trading based on what QQQ was doing and not the individual bearish news. You will very rarely see an opportunity to act this delayed on a clear negative news headline or positive and have the reaction follow through a few hours later. So interesting to observe. And I was trading riot bearish in response to that a bit. But MARA was the play. Fidelity just didn't have any shorts available for MARA. Coin, another crypto name, had a really strong day. Nice tightening equilibrium here as well. Hope that tightens up a bit more into next week. And the hourly consolidation healthy compared to what everything else did at the end of the day. So MARA is now going to be our lead crypto bear. And if we drop down and break 651, that will be a notable bear break. Gold getting the daily bounce underway. The miners gave the heads up. The miners showed us yesterday there was a bullish correlation. Keep an eye out for a metals bounce. Gold bounced today, and that was part of the reason I covered my silver short. I've been short SLV for 6 weeks, maybe 2 months at this point. And I mentioned in the video yesterday, I'm looking to cover today. And so once I saw that we saw a little bit further weakness, the daily RSI was in the low 20s. Good enough for me, I'm out. If I'm going to re-enter a short, it will be on a weekly bounce because we just dropped 16, 17% straight drop. And I'm not going to be greedy. I'm going to lock that in and out of any metals positions at this point. Still going to stick with the Netflix short because, again, the broader market bears are keeping their control. Netflix is a potential daily bear flag. And my big picture target for Netflix is looking down towards, I'd like to see 290 at least. Oil, bounce follow through. Again, the 2-day equilibrium continues to tighten up. We're scouting a lower high compared to 80.78 and patiently waiting for this tightening range to break sometime in March. So overall, bears win the day thanks to the afternoon. Bulls look good, up until when we rejected hard from resistance and rolled over. We've got great volatility for day trading the natural gas names. We've got nice volatility in NVDA and Tesla, watching to see if they're going to be laggard bears. And now we're going to have a bear lean on MARA, certainly watching for an hourly lower high to be the result of the next bounce. NVDA is going to be looking for an hourly lower high to be the result of the next bounce. So bears starting to gain a little bit of confidence, or I should say keeping their confidence. And we'll see if we can take out the lows of last week to continue that. Appreciate you watching. Do good things, and we will see you tomorrow. Lots of signs of spring for February. This bush is the first flower scent that is in the yard. Got the daffodils coming up. And around here, the tulips are all starting. No flowers on the tulips. One of these flowers, I think it's a hyacinth something. Haven't cleared out the garden yet. I'm gonna wait a bit until frost threat is gone. I'm gonna mulch it. But the garlic is looking real good. Planted that back in October. Other than that, a bunch of these red buds on the trees. Starting to put out some leaves. First signs of the frogs. Bugs are starting to come out. Another month, it'll be good to go.